That's interesting. I have no idea what that's about. Good evening, everybody. Good evening. What's going on? What's going on? What's going on? Good evening. Good evening. I don't know why it's saying I've been on live for 9 minutes and I just started. That's strange. But we'll deal with it. So we will deal with it. How's everybody doing tonight? How is everyone doing? Let's see here. Try something. Let's see something here. Hello, everybody. Hello. Good evening. Good evening. This is so like or subscribe to the channel, or on Facebook, YouTube. If you're on YouTube, hit that like button. Hit that subscribe button to subscribe to the channel. For everybody on Facebook, hit the like button and hit the share button. Share this video. Share this with your friends, friends. Hopefully they share with their friends. We can be friends. We can do this every weekend. Shit. Little B.I.G. Biggie. What's going on? What's going on, everybody? Tonight we're going to cover chart patterns. One of my first chart patterns I learned when I was first starting off as a trader. And it served me well for that time period, and I think it'd be a great pattern for those who are new to stock trading to learn. It's a great pattern to learn. It's very simple. It's not really hard, and you can actually search for it. Okay, you can search for it on a filter. That way, you can kind of narrow down from the filter which stock looks best to you. So I'll cover that this evening too. The site that you can go and use, it's a free site. Everybody likes free 99, right? So that'll be what I'm covering tonight. Won't be before you long. Like I said, it's a very simple pattern to choose from. Market recap today. Today started off red. The NASDAQ did not want to cooperate today when markets first opened. And by the end of the day, all three were in the green. So if you can see the background, you got Questlove and Black Thought. They are both in the green today. They are both in the green. That's a good thing. If the markets were up, then that means a lot of people were profitable, hopefully. Although most day traders lose money. I was one of them. I don't particularly like to day trade that much. I'm learning day trading. I'm more of a swing trader. Swing trading is you hold stocks a little bit longer than a day. However, the pattern that I'm going to show you will prove to you that learning this pattern and swing trading this pattern can make you a profitable trader. It can make you a profitable trader. I am living proof. So we will get into it. Like I said before, like the video if you're on Facebook and YouTube, hit that like button. If you're on Facebook, hit the share button, share it with your friends, share it with their friends. And like I said, we can all be friends. So, let's get into it here. All right. Now, what is this chart pattern that I'm speaking of, right? What is this chart pattern I'm speaking of? Well, it's a geometric pattern. In the stock market, there are a lot of stocks tend to make a lot of different patterns, a lot of different geometric patterns. You have, and what I'll be covering tonight is one of my favorites that I started off trading with, and it served me well. As I've progressed in my trading career, the more I've learned, the better I've become as a trader. I haven't had to rely heavily on finding this particular pattern. But that's, like I said, it's a great pattern to learn when you're first starting out. And that's what everybody wants, right? Everybody wants something that they can figure out, right? That they can use to their advantage. And I don't know why this thing here. Let's try something. I'm gonna try something out. Probably can't change it. Oh well. We will move. Oh, here we go. Let's see here. Stream. Oh well. Here we go. So, what is this chart pattern? This chart pattern is what they call an ascending triangle or a wedge pattern. Two different names for it. They both serve the same purpose, right? They both serve the same purpose. And it's a pattern that's commonly used for what they call a breakout trade. What is a breakout trade, you ask? Well, a breakout trade is simply this. A stock is in a certain price range where it can't go above and it won't go below. Once it gets to the peak of that range, it does what they call breakout. And it can break out to the upside from a bullish fashion, or it will break out to the downside from a bearish fashion. Okay, what does that mean? That means simply if you get in right before the breakout happens and it's to the upside, that means you've hit the lotto. You struck gold. If that breaks down, then that means, hey, you lost some money. But more times than not, this is a pattern that generally works. I'd say 90% of the time. So it's got a 90% win rate, and I'll go over a stock that I traded years ago, a couple years ago. that I traded. That was essentially a ascending wedge pattern, and it was a short-lived ascending wedge pattern, but it was a very profitable trade. Like I said in my post, okay, it was a trade where I made at least 30% or more of my money that I was trading at that time. So we will get to it here. We will get to it. Let me bring up a chart. Okay, let me bring up a chart here. Where am I at here? All right. Here we go. Okay. Here is the chart. Here is the chart. So this is a stock January of 2020. Right before the Rona hit. That Rona. Right before the coronavirus hit. So this was a pattern. This was a stock that I traded. Now, what interested me in the pattern or the stock initially was the fact that it was coming off of some of its all-time lows. And those can be some of the best trades. So here's a key for individuals who are just now starting out in the stock market. One thing you can look for is you can look for stocks that have made all-time lows, because if it made an all-time low, then at some point in time it's bound to go to an all-time or return back to its high point. And those can be some of the best stocks to trade when they're coming off of their all-time lows. So this was one that I particularly found through a scanner that I was using at the time, and it came up off of an all-time low. When I found the stock, it was trading. I got into the stock around, when did I get into the stock? I got into the stock around January. I think I got in January. When did I get in the stock? I got in around January 14th, I believe. Around this time, between January 10th and January 14th. That's when I got in the stock. That's when I noticed it. So when I noticed the stock, one of the things that I saw was, of course, that it fell from this area, 81 cents. And that's another key point. You want to look for stocks that have, pulled back some. After they've run up, you can always expect a stock to pull back. And like I talked about in one of my previous videos, when a stock makes a 20% run, 15 to 20% run, give or take, you can expect a pullback. And if we look here, actually this was a 40% run, so give or take, this went a little bit above its its run, but generally speaking, 20%, you look for a pullback. So after that pullback happened and it traded up to this point here, and it, the next day it traded down towards this line, that was a key for me. Okay, the reason being is this pattern notoriously likes to trade within a range. So as you can see, it traded within a range of 78 cents to 65 cents, right? Now, the thing that you want to look for in this pattern is you want to see that the lows of the pattern are getting higher. So see, this low was at 61 cents, then this low was at 68 cents, then this low was at 70 cents, and you had a low here of 70 cents, basically telling you that the buyers are not letting the stock drop below a certain point every day. that's your signal. That's your clue, right? So your clue is when you have a line of resistance. So what I mean by a line of resistance, what I mean by that is this. If you look at the price on January 10th, the price closed at 74 cents. You look at the close of the high of the price on January 15th is 74 cents. So that's your clue that it can't get past 74 cents and it won't go lower than the lowest point of 61 cents. So you have a constant resistance point that it can't go past, and you have an ascending support area where it can't go lower. So when you have ascending support and you have a static resistance point that's been touched multiple times, that is your clue that the stock is bound to break out at some point in time. Like I said, the closer it gets to the pinnacle of the triangle of the wedge, it'll break out. And the reason they call this an ascending wedge is because guess what it looks like? It looks like a wedge. Looks like a triangle almost. So if you were to do this, okay, what is that? What does that look like? That looks like a wedge. Like, you know, a wedge that you put it like a doorstop. You put it in the door to keep the door from moving, right? It looks exactly like that. So that is your clue. That is your key. And this is one of the patterns that I traded when I first started my trading career. That was a really good pattern to trade for me. So, and this pattern happens often, okay? Like I said, it happens often, and one of the good ways to find this pattern, if it's when it's coming off of, when the stock price is coming off of, you know, all-time lows. I believe, you know, this stock back in, you know, late 2019, early 2020, you know, the trend started to change. So trend was down, it started to reverse and move back up. So, like I said, that was one of my favorite patterns, and it's a fairly simple pattern to find. So there's a site that you can go to called Finviz, finviz.com. Remember, I've brought this site up before, and you can search for stocks that meet the criteria of an ascending wedge. And, you know, like here they call it ascending triangle. You can call it a wedge, ascending triangle. Essentially, it's a triangle pattern that has price ascending within the pattern. So you can do, let's see here. Let's just do this one. So you can come here. What I've got set up so far is the pattern. So when I go to the description, it's best to look for stocks that meet this criteria. So they have a float that's short 10% or more. So I set it at the 15% or under. So this is going to pull stocks that have a short float that's at least 15% or less. The reason you want to have a stock that has a float that's short is because it can create what they call a short squeeze. And when you have an ascending triangle, this long bar here essentially is a short squeeze. Basically, people who were shorted the stock, or who short the stock, were forced to cover their short positions as the stock went higher. And I believe this day the company came out with a news catalyst, and that was was the match that lit the fire for the stock price to move higher and to cause a short squeeze. So the float, you want to have it under 50. The float that's short, you want to have it under 15%. Generally, 15% or higher stocks are a little bit more volatile to trade, so they're not as easy to trade. So that's why I recommend that. Current volume, you want at least 500,000 shares minimum. Some people say 1 million shares. 500,000 to 1 million shares, give or take. You can do 1 million. Just depends on how much money you're using to trade, because the thing is, you never want to trade, you never want to buy more than 10% shares. You never want to buy more shares than 10% of the average volume. So if the average volume is 500,000 shares, you don't want to buy more than 10% of those shares, because if you do that, you can leave a footprint. So generally, if you're, depending on the stock price, things like that, you want to figure those things out. And that's a later topic. However, for, looking for those stocks, like I said, current volume, 500,000 minimum or 1 million. The float, you want at least 50 million shares or less. The reason you want 50 million shares or less is because it creates a scarcity scenario. So say for instance, let's see here. Say for instance, the stock is trading. Say for instance, the stock has a float, and the float is essentially the number of shares that are available on the open market to trade. So say for instance, if a stock's trading 50 million shares and the day it breaks out, it trades 100 million shares. That means that the float changed hands, essentially one time. So being that the shares traded hands at one time, that can aid in the price moving that much higher, that much faster. So you want to have a float that's 50 million shares or less. Current volume is 500,000 or 1 million or more. And from a technical standpoint, you go to the technical tab and you want to click on pattern triangle ascending, and it'll pull up a list of stocks that meet that criteria, that have 50 million shares or less from a float standpoint, that have at least 500,000 shares of current volume, and that match the triangle ascending pattern. And if you take your cursor and run it down each stock, it will show you stocks that meet that criteria. Okay. Actually, this is one. Let's take a look at this one. Let me go back. APLE. So APLE, if you look at the stock, well, let's do this. Let's just use the screener. This will be much easier. APLE, February of this year. Let me go back. Looks like I've actually charted it before. So this, it's not the best ascending wedge or ascending triangle. I don't like that one. That one's more of a W pattern. Let's change. And you can change the settings on this too to have it look for one that meets a stronger pattern. So let's do that. Let's tweak the volume on this bad boy. Let's do over 1 million shares. Now let's see what we got. All right, that's the first page. All right, let's do this one. This one looks like a pretty good one. MAT. So, what you want to do is you want to draw where the price is having a hard time getting past. And if you do this here, it's having a hard time getting past that point. And we will do this. Now that's that. Trend line. So price was trending here. And for a trend line, you essentially want to have a line that touches multiple points. So as you can see here, right? Price touched this area, came back lower, and it couldn't get past after you had this green candle here. Price would not close below roughly $18. So as every day goes by, price continues to go higher and higher and higher. So it's making higher lows and higher highs. And when you, like I said, essentially when you get to the sort of the pinnacle or the apex or the corner of this pattern, that's when you want to start paying attention, because this is saying that, hey, look, when buyers take this stock up to this line, the sellers push it back down and the buyers push it back up. And then the sellers and the buyers fought for price, and it gave you this indecision here. Basically, you had people selling it from the top here, and you had people buying it from the top here, and they met in the middle. And they said, hey, we don't know what to do. So then price gapped up above this line here and closed below, right? Essentially, you could have got in at any point in this area here and held it for a swing trade past 1923. So essentially, let's just say you bought it on the close of this indecision day, and you held it past that point. Now you would have made essentially 7% on your 7% return on your money. Now most people don't make 7% in a year, and this is a $20 stock. So, you know, the average, I believe, for the market is, what is it, 3% a year, and here it is, you made 7% in a few days. That's just one stock. And, you know, depending on, you know, if you get it from a lower point, the greater the move. So had you bought it, had you did that same thing and looked for the stock when it got down to, let's see here, roughly around this point, at $11. Just think, you could have, let's just mark it up here. That's the point you can't get past. Okay, here's your trend line. Here's how the stock is trending. And you got to play around with it because what it likes to do, it likes to snap it to the low of something. Which, let me see if I can turn that off. I do not want just, nope, won't mess with it. Okay. But you get the idea. The idea is to essentially find a stock. Okay, come on. Now, I know what I can do. Here we go. All right. There we go. That's better. There you go. So, as you can see, price would not go below 11.25, and it basically traded up, came back down, traded up, and came back down and opened, broke out to the upside. So had you bought this stock around this time and rolled it all the way up to here, you would have made 26% of your money. And that's essentially an ascending wedge pattern. That's all it is. That's all an ascending wedge pattern is. So, good evening, cuz. Good evening. So essentially, that's one of the, like I said, that's one of the first patterns that I learned when I first started trading, and it's made me a nice chunk of money. Like I said in the post, I've made like the one stock AIM. That was more of like a 40 or 50% move. There you go, you know. And that happens all the time. And like I said, you go to Stock Fetcher, you look for the ascending triangle pattern. You can do just the pattern, or you can do a strong pattern. Basically, it makes it more restrictive what it's looking for. And when you find that pattern, you just look to see where price could not get above. And remember what I talked about in one of my previous videos on support and resistance. Resistance is essentially where price could not move above. And when you see price have those wicks and touch that price multiple times, generally speaking, that's your point of resistance. You need at least 2 points. You need price to touch that area at least 2 times, basically. Now, like I talked about before, you want to look for price to touch it at least 3 to 4 times, three or more times. When you see price touch a resistance area at least 3 or 4 times, you really want to pay attention to it then, because after that, typically what you see is your breakout pattern. You see where it breaks out to the upside. Because what it's doing is, it's when people short stocks, they put what they call a stop order, a sell stop. Is it a sell stop? They essentially put an order at the top. Yeah, they put a buy stop. So what it is saying that, hey, if price goes above this, they want to buy to cover their shares. So essentially their order is at the top of that line, somewhere above the top of that line. And each time price touches that, it's taking out orders above that line. And the more orders you take out, the less resistance you have, the less orders you have to keep you from going to the high side. And like I said, typically from what I've seen, when you start seeing that happen around 3 or more times, between 3 and 5 times, that's typically when you can expect a breakout to happen, where you can expect price to move higher. So, with that being said, that's all I got today. Didn't want to be before you long. Essentially, like I said, it's one of my favorite patterns that I've traded before. I still trade it to this day when I see it. However, now I've sort of systematized things a little bit more to where, I use other things that I've learned. But like I said, for people who are new, that's a great pattern to learn. It happens all the time. I've given you essentially where you can go and search for it. Like I said, FinViz is a great tool to use. The screener, you go to finviz.com, click on screeners, and then that's where you go and search for the ascending triangle pattern according to those things that I just mentioned. So with that being said, I would like to just say good night, everybody. I want to thank everyone who did tune in to the broadcast. If you didn't, hey, go back on my Facebook page, rewatch it. You can rewatch it at your own leisure. You can speed through it, skip forward, skip backwards if you didn't hear something. Or if you're on YouTube, hey, you can rewatch it at your leisure. So, with that being said, I want to thank everybody, like I said again, for tuning in tonight. And I will bid everyone a good night. Okay, I will not be on Friday. Friday, I am not going to be online. I will be back on to Facebook Live next Monday. Next Monday, I will be back on. Next Monday will be the 1st. So it will be March 1st, and that's when I'll be back on. So March 1st, next Monday, 6:30 p.m. I will be back on talking about trading, helping the average trader learn how to trade stocks to be successful at it. If you have any questions about anything, feel free to reach out to me. Leave a comment in the comment section below the video on Facebook or YouTube. If you're on Facebook, you can send me a message via DM and I will get back to you. So have a good night, everyone. Take care. Bye-bye.